On Sunday, the 11th of May, we saw the US and China announce a trade deal where they decided to reduce tariffs on each other down from 145% tariffs on China. That was reduced down to, I believe, 30%. And China reduced their tariffs on the US down to 11%. So we've got tariff dramas beginning to subside, and we're seeing the markets begin to price in more bullish momentum, and that can be seen on US 30. We also had CPI data yesterday, which was Tuesday, the 13th of May, where we saw consumer price index increase by 0.2%, which happened to be lower than expected. We're seeing inflation begin to tame in the US, which is amazing for the US markets. Investors are really enjoying that, and showing that US inflation is annualizing at 2.8%. So this is showing that there's fewer signs of tariff impacts on the markets, on the economy in the US, which is extremely beneficial. So we're slowly but surely getting all the news out of the way. This week we had CPI on Tuesday, we had the tariff drama on the weekend. Now the only thing we've got left is core PPI, and we've got Fed Chair Jerome Powell speaking on Thursday. Once we get past these two events, the market should have a clear catalyst to move higher. So I believe, and I'm going to analyze the charts, I believe that now is a good time to begin to position for longs into the market. And I'm going to show you exactly why. I'm going to do a top-down analysis, so make sure you stick around to the end of the video if you want to get better insights of what's going on, mainly on the US 30 chart, but this should show you what's going on overall in the US markets. All right, so let's begin. So on the US 30 chart, we can see that the market has been trending higher. I'm going to first start off by drawing our range, and this range is the range that price was trading at prior to the decline. We saw price trading in a range, and it was the break of the range that caused price to really collapse. And this range really was just this area here, where we saw price target the highs, target the lows, retarget the highs before collapsing to sweep our level of liquidity right down here, which hadn't been swept for quite some time. Um, and then we had our liquidity sweep. We saw price bounce inside the fair value gap right here, and then we saw price begin to go higher. We had a market structure shift to the upside right here, and that was this area printing a higher high, and then we pulled back and made a higher low right here. And after we had the higher low, we swept liquidity in this area right here, and price began to go higher. Now, the reason I've switched my stance to bullish is for a few reasons. The first reason is obviously we had the trade deal with China. Uncertainty is not out of the way. It's a pause for 90 days before potential trade drama reignite. We don't know what's going to happen. But the main reason is we've actually cleared this fair value gap. So now price is trading above the fair value gap and back into the range. The reason why this is extremely important is because now that today is Wednesday, and as I mentioned already, that we have a potential catalyst to come on Thursday with Jerome Powell speaking, based on the inflation data that we received and based on the US-China de-escalation of their trade war, the most likely outcome is price is going to go higher. And I would like to begin to position into the markets in this fair value gap here. And I'm going to remove our lower fair value gap. Although we have Asian session liquidity resting here, the idea that, price doesn't get down to here today, sweep liquidity, the idea that maybe we just come in, bounce off the fair value gap and go higher is my most highly anticipated outcome. I think that's the most likely outcome. And if we do get a fair value gap bounce, we're most likely going to target the premium of the range. And the reason why I'm targeting the premium of the range is because if you take a look at where we are, we're currently trading in a discount. What this means is that if we could get price to, get into our fair value gap, sweep the lows of the previous day, get into here, it will be amazing to position within this fair value gap, and price will target the premium part of the range in an attempt to even target the highs that are the liquidity that are resting at the highs of the range, which is this liquidity right here. My favorite trade for today and over the next few weeks is that we get a bounce off this fair value gap and price continues to rally higher in an attempt to sweep liquidity resting here, and then eventually target the liquidity up here, and hopefully go to new all-time highs. There's no guarantee in this. My base case is that we target the premium part of the range, which is here, and at this fair value gap, we'll need to see what happens. I believe there's catalyst for the market to propel higher from here. As you all know, the market tends to trend higher on a longer term basis, so we should expect the market to go higher. And another reason for this is if we take a look at where the market is year to date, the first trading session of the year was here. So if you take a look at this line here, we'd be able to see that the market is still currently down for the year. We haven't actually, we're not actually higher for the year. based on this area here. We're not actually higher for the year. So the moment price, we get back into this fair value gap and we sweep, if we have the idea that every year the market tends to go higher and higher and higher, we should at bare minimum expect price to get above this area. So we should go positive for the year at bare minimum. Even if we have muted returns for the year of maybe 5% or 6%, or even if we have, a 3% return in year, that's still higher than this current position. So the fact that we're down for the year in itself is a massive bullish catalyst. At the bare minimum, price should be trading higher for the year. Doesn't mean that we're going to have a massive 20% return, but we should definitely, at the bare minimum, be above 0% and not negative for the year. Although this year has started quite volatile, we do know that there's quite a few catalysts coming in the near future. For example, Trump's a business savvy president in a way. He's all about interest rates reduction. He's trying to position the US to be to continue to be a major economic superpower in the world. So the most likely outcome is that we do have good returns this year. But even if we have muted returns for this year, I expect us to at least be above 0%. So at least have a positive return for the year. And that's why I'm bullish for the year. But the trade idea that I'm looking at this current moment is, obviously we have our fair value gap down here. But if I just wanted to be a bit more adamant and to show you guys how I'm expecting to approach this trade, I'm being patient at the moment. It's currently 9:43 UK time. So we haven't started the New York session. But this level right here, actually no, it's this one. This level right here is our Asian session lows. We know liquidity is resting at this low. So what I'm expecting to see today is at some point I should see price pull back into our fair value gap, sweep our level of liquidity, and potentially rally higher. After we get our, liquidity sweep, the institution should come and try and position within the fair value gap in an attempt to target our levels of liquidity above. My only worry is that there's a chance this trade might be wrong, in the sense that maybe we don't get a bounce here. We actually have price target or unset level of liquidity from Monday, from the Sunday session, I should say. And then if we take a deeper look, there's also a possibility that we come back down and sweep these levels of liquidity resting at this area here, which still hasn't been swept. So I'm willing to position and put money at work at this position here. That being said, there's no guarantees on the trade. There's no guarantees in regards to what the market does. But this is a position that I'm willing to take, buying in a discount part of the range in an attempt to target the premium part of the range at the bare minimum. Really quickly, I do want to give you guys some updates on my funded account, because I haven't actually been posting much. But I have had two payouts. I've had my $6,000 payout. I've had $8,000 payout, sorry, or roughly $9,000 payout, and I've had a $2,000 payout. This was a 3% return, this was an 11% return, and after getting my profit split, it came to roughly $11,000 in total. Currently on my current trading account, on this current account, I'm roughly up another 3%, and my end date when I should get my payout is the 26th of May. So that in itself, I do have some profits to try and build upon as we approach the 26th of May. Today's currently the 14th. So just to be clear, I have an overview of my spreadsheet, which I'm actually showing you how much I'm earning from these accounts. I'm currently funded with Funded Next. Challenge log, I've got $11,000 in payouts. I spent $439. I've been refunded the $439. So I've spent no money and I've made over $11,000. If we take a look, spent $439, refunded $439, and I've got a zero out-of-pocket return, a zero out-of-pocket spend, which is amazing. Let's take a look at some more statistics. At the moment for the year, for this trading road to $1 million, I've bought one challenge, attempted one challenge, and I've made $11,000 from this current account. I'm not going to show you this one, that's to do with my business. And then this is the profit split. I'm still waiting on them to give me the previous profit split. So, from a $439 investment, it's not bad returning $11,000 and getting your $439 refunded as well. So I'm making quite a lot of progress. I just want to build more capital on the account, get some more returns, and then I will be buying another. Hopefully, what I want to do, I don't want to spend too much time on the challenges. So what I intend to do is buy two 200k accounts with a particular prop firm, so that when I do both the accounts simultaneously, risking $2,000 for obviously the price of the evaluation, when I pass both of the phases and I get funded, I go all the way up to $500,000 worth of capital. So that's why it's important the way I'm trying to structure this, to extract as much profits as I can going into summer. Then I'll I'll give myself July off and then hopefully come back in August with the evaluation prop firm evaluations, and hopefully go from 100K to 500K, and that's how we get from $100,000 to $1 million in funded capital in a very short space of time. I really do appreciate you guys being here. I know I haven't posted a video in a while, but yeah, I hope you found value in this. See you in the next video.